Top three things in my notebook this morning: number one, the U.S. dollar; number two, commodities, specifically oil; and then finally the Russell 2000. First on the dollar, you look at, I guess yesterday felt like yesterday, maybe not. Just going through all the data, it just looked like yesterday because it was the last trading day. But whatever. The dollar down, rates down, stocks up on the employment report. Have you seen this movie before? Have you seen the hope? Have you seen the policy to inflate? That is exactly what it looks like. So again, look at the dollar for what it is. It's now bearish from a trend perspective again in our model, which is a very ominous signal in the face of falling interest rates, which are in as much a growth slowing signal as anything else on the margin here. So watch that. Second point would be commodities, oil specifically. Oil had a huge move on Friday. So people are like, wow, look at stocks, look at them, they went up. I mean, well, they didn't go up as much as oil and gold did. I mean, or silver for that matter. If you look at last week's performance, silver, of course, is up 4.3%, coffee up 8.4%. Look, I mean, this stuff's really moving. At the end of the day, it's moving a lot more than equities. Equities at the end of the day had a dead cat bounce. Again, on a relatively low volume day, the top 5 volume days in the U.S. stock market for the year to date have all been down days. So again, inflation accelerating would be our point on both oil and commodities. Oil is back above the trend line on Brent of 108.53. And then finally, the Russell 2000. There was a bounce in the S&P, but there's no bounce in the Russell. The Russell down 1.3% on the week, down 4% for the year to date. Of course, that is a growth slowing expectation signal in as much as down dollar and down rates are. So that's it. Those are your top three things.